Hallo miteinander. This will be the second video of the Goldbach basics, and today I'm going into the question, which Goldbach range should one use? I think that's a common question, which one is the right Goldbach range? And to make it short, I would say it's similar to the question or the thought process behind it, which time frame you should use and for what. For me personally, the GB range 729 gives me an idea of the, let's say, weekly profile. Therefore, to have a look at it, I use the 4-hour candles or the 1 hour, but not lower than that. And you can see price entered into that GB range on the 6th of August. He bounced off almost to the tick from that block, went to the high. Here you got your rejection block, as it's aligning nicely with that level and going all the way back down to the 20th of August. So in this case, it's like a range for 2 weeks. And now we are back in, since we are going sideways. I think on a higher time frame, we are now in the top of the market maker model. And now you also could use it for your trading. How that? Because let's say on here, just along this 4-hour candle, the 29 is an important level where you would, in this case, see price to hold and going up. So if you're going down here on a lower time frame, let's do this quickly. Right here. And as I always say, especially on the higher GB range, but even though on the 243, it's a good thing to mark out the half of it, as you can see also on that one. It just went a little bit below this line, and then price went up. So on a higher GB range, you could target down from here, for example, the 29. This gives you like already 50 handles. Depending on the market structure, you would take here partials and then maybe targeting the next level, or taking another partials again on the half of it. Let's see how that looks. And again, you see here it almost touched it. The body didn't close below here, just wick down and then up again. So you also can trade on the 1 minute, 5 minute on a higher GB range than you would play level to level. To get an even bigger picture where we are, you can use the 2187 range. Usually not go higher than this range. Let's see. Now, before I change the time frame here as well, since the levels are so big here, you can have quarter levels, and it just hit it perfectly, then went all the way up now to that upper quarter. And on the daily, it gives you also a good overall picture. on the 23rd of June, we entered this GB range again. I went all the way up to the OB level, which is a turning point for an algo. Went down to the breaker, all the way almost to the tick, to the high, back down, bounced again on the breaker level, and now going upwards. What will be interesting to see, and therefore the higher levels are interesting. We have here in the fair value gap level, this fair value gap. Let's see what it does then here, but this could be, for instance, your next target. And so higher GB range can also help you if you like a big CB, to get an idea how far into it price might go, because we would assume or hope that it goes up here where the actual fair value gap level is, and since we already passed half of the LV level, that's looking good. What else? So you see, it's amazing. Like this gives you really like the high, the lows, as mentioned in my previous video. Also the premium price went down to the discount, then back up into premium, and once it went down to the discount, you would expect to go higher to the high and finish its way. I mainly use for intraday trading the 243 range, because as you know by now, the range equals to dollars. So this gives you a good daily range or a half range. Let's take that one off, and yeah. Okay. All right. And as you can see here, for now, we went up again, marked the half of the LV level. Yeah. Just went a little bit above. Now you're going down into, here comes the fair value gap level. Here we have that fair value gap. So what you would like to see is just touching in slightly, if so that also, I just missed it here a little bit, going into light slightly, also to see if price finds support on this accumulation here and going even higher. So yeah, 240 is the one I use for intraday. And let's see, well, this will actually be in a different video, how you can stack GP ranges, but just out of curiosity, from which level it bounced. If we add one lower, below that one. Okay. So currently, this you will see very often. Price tends to go from one liquidity level, mainly what I mean by this is the 71. It tends to go to the other one, 29, which, if you do the math, gives together 100 as well. Or you could also argue price tends to go from the 59, almost here again in the middle, which I like the LV, the breaker level and the LV level. I usually mark out the exact middle. we missed it a little bit. Just from breaker, also often you see that we are going to the next breaker. Did I miss anything? Yep. So at the end, it comes down to your personal trading style. If you or how you do the daily focus. If you make all the time a top-down analyze, going to figure out top-down, and then I would first also have a look on the higher GB range. And actually, once you have your picture, then just stick to one GB range. Otherwise, you might just get too confused, because then you will see on 729 it's on that level, vice versa, and on the lower level it's on a different level, and then you might just confuse if it goes now to this fair value gap or is it that one. So get a bigger picture and then just stick to one. And I trade mainly the first hour, and what this helps me then, those levels, because you see we had like this accumulation, then this manipulation. So I would have expected to go to a liquidity void level to that one, and or the breaker level. That's usually good points how far price will go before turning around. Of course, depending on other factors, on higher time frames and market structure. Yeah. So in the next video, we will have a look at the Algo 1 and Algo 2, on which time frame GB range I think they are the most effective to use, and that's for the next lesson. All right, see you then. Bye bye.